Hi folks, welcome to this video on shared dividends. Now this is a handout that we had in class, if you were in class or if you came to an extra session that I gave, so it's posted in your course as well. So here we have a company and their equity section at the beginning of December, and we see the common shares have unlimited authorization, 100,000 shares issued and outstanding, and in return for those 100,000 shares, common shareholders gave a company $1.5 million. Retained earnings are sitting at $700,000, and total shareholders' equity is $2.2 million. Now, a couple of days later, on December the 3rd, the board declared a 10% share dividend at a market price of $13 a share, and they're not going to issue the shares until January the 10th, 2014, and we just wanted to make it clear that a company has a December 31st year end. So what we wanted you to do is to make the journal entries at the declaration date. Now, remember here, they gave us the price per share based on the market values on the stock exchange at December the 3rd. And that's the value that we're going to use to value the share dividend. But what we need to calculate first is how many new shares we are going to be issuing, right? And multiply that by 13,000. Now, because we're declaring but not yet issuing the dividends, we debit an account called share dividends, which is what we call the Contra equity account, meaning it's part of the equity section balance calculation, but it's a normal debit balance, which means it reduces shareholders' equity. Hence, it's a Contra equity account. And we debit share dividends for 130,000, which we calculated as 100,000 common shares, because that's the number of shares that are issued and outstanding, times 10%, because 10% times 100,000 common shares is going to give us the number of new shares, 10,000 of them, that we are going to issue. That's what we're issuing on January the 10th. But we have to value them at $13 a share. So we're going to debit share dividends, 130,000, and we're going to credit our new shareholders' equity account, common share dividends distributable, 130,000. Notice that distributable account is not a liability. So don't call it common share dividends payable or stick it in the liability section. It's an equity account. It's actually part of your contributed capital. So you have this account in the contributed capital section until you actually issue the common shares, and we'll show you that in a later transaction. Now what we need to do, we're at year end and we want to close the dividends declared or share dividends account. So we're going to debit retained earnings and credit share dividends. So if we did the equity section at December the 31st, 2013, remember we haven't issued the shares yet. So this is what I said a few minutes ago. In the contributed capital section, which is our heading, we're going to have two accounts. The common shares, where the authorization is unlimited, but only 100,000 issued and outstanding, just like we had at the beginning of the question. Why? Because these 10,000 shares have not yet been issued. They're not going to be issued until January the 10th. So we still have 1.5 million in common share equity outstanding. We also have common share dividends distributable. That's the account we created here. So notice it's in the equity section. It's not a liability, and that's 130,000. So we're going to have total contributed capital at this point of 1.63 million. But don't forget, as at the balance sheet date, don't forget, before we do the balance sheet, we closed out the share dividend account to retained earnings. So retained earnings went from 700,000, right? We deducted 130,000 because we closed the share dividend account. So the post-closing or after closing balance and retained earnings that goes into the equity section is 570,000. So here you can see we have 2.2 million in total shareholders' equity. Note one key thing. The amount of equity we started with before we did the share dividend was 2.2 million as well. It still is here. Why? Well, because the act of declaring and issuing a share dividend does not create any new shareholders' equity. What we mean is that the total dollar value of shareholders' equity, strictly as a result of a share dividend transaction, will not change total shareholders' equity. Note what it did do. If you compare the equity section at December 31st, 2013 to what it was up here at December 1st, it is different, account by account. But now what do you notice? you notice the retained earnings here is $130,000 less than when you started, and the common share account, okay, which was $1.5 million, it's still the same, but don't forget we added $130 here for the common share dividend distributable account, which is the new account we included here. So that's why your total shareholders' equity doesn't change. Now what happens, we'll see a similar thing here. When we issue the shares on January the 10th, all we're doing is reducing the common share dividend distributable account, which is an equity account. So we're reducing shareholders' equity through that debit, and we're crediting shareholders' equity when we credit common shares by $130,000. So your shareholders' equity goes up $130 and it goes down $130. So therefore, there's no change in shareholders' equity. So now if we did, after we issued the shares, if we did a balance sheet now, what would we have in the equity section? Now we'd have those additional 10,000 shares issued. Remember, we calculated up here that we were going to issue 10,000 new shares on January the 10th. We just had to value them up here for the share dividend. Well, now they're issued. So it's no longer 100,000 shares, it's 110,000 shares. And notice how that common share dividend distributable account that we had here, it kind of got folded in to this 1.5 million. How? Because don't forget, we debited this account. So now its balance went from credit 130 and we debited it. So now it's zero. Why? Because we issued the shares. So now notice that extra 130,000 is now part of the common share account as a result of this journal entry here. Now what do we have? Well, didn't change retained earnings from December 31st. Oh, that should say January 10th, right? 2014. I'll just fix that up. So now what we have here at January 10th, 2014, immediately after the new shares were issued, we still have retained earnings at 570 because we didn't talk about any income data, right? So notice again, your total shareholders' equity is still 2.2 million. So just bear that in mind. Share dividends do not increase, or in and of themselves do not increase or decrease total shareholders' equity. They change account balances, but they don't change the total amount of shareholders' equity in the shareholders' equity section. So I hope you found this video helpful, and have a great day.